Okay, so the last thing I want to cover before we actually dive into how taxes have a direct effect on your money and your investments is I want to talk about what is your federal tax liability, how to actually calculate your effective taxes. Because as we start to use some examples, I want you to be able to get an idea of where you're at. So we just went through like the tax history and tax thresholds, and you might say, well, I'm not in that top tax bracket, so I don't have to pay X amount in taxes. But how much do you have to pay in taxes? What is your actual effective tax bracket? When I'm meeting with clients and I start talking about what their effective tax bracket is, most people don't know. Now, I am not a CPA. I'm not here to give you tax advice. You can consult with a tax professional on that. But I just want to help you to understand how they calculate your taxes. So I'm going to use a nice even round number of $100,000 and a married filing jointly situation. Okay. So if we look at how this works, we have what we call a marginal tax rate, which for this particular client making $100,000 a year would be 22%. Because if you look at the marginal tax brackets, you're looking at from 0 to 19,750 is taxed at 10%, then 12%, 22%. And this client falls under this range right here, making $100,000 a year. So they're in that 22% tax bracket. In other words, they're in that marginal tax rate of 22%. But that doesn't mean that they pay $22,000 of taxes, because you have to calculate what we call your effective tax rate to actually figure out how much you're paying in taxes. And the way that works is that they actually take your first $19,750 of income and tax that much of your income at the 10% rate. Okay, so in other words, you're paying $1975 in taxes on your first, chunk of money, right? On the first amount of money that you make, up to $19,750 currently, which, like I said, these numbers might all be different by the time you're watching this video, but just to help you understand how this works. Now, your income from $19,751 all the way up to $80,250, that much of your income is being taxed at 12%. Okay, so your actual taxes on that much of your money is $7,260. So finally, for this particular client, the money that they make from $80,000 up to $100,000, because this client's only at $100,000, right? So the amount of money they make from $80,000 up to $100,000 is going to be taxed at that 22% rate. Now, this is extremely important to understand because, and that's why that number's smaller, because it's on less money. It's only on the $80,000 to $100,000, and that's why that's smaller. So you can see that the effective, which is kind of like an average, right? Your effective tax rate is 13.58. So this particular client for 2020 would pay $13,580 in taxes on $100,000. The reason why this is so important as we start to look at how your investments are affected by taxes is because sometimes I've had clients really worried about maybe doing a Roth conversion, okay, converting some of your IRA money to a Roth because they think that it's going to throw you into a different tax bracket. And now all of a sudden, all of your money is going to be taxed at 32% instead of 24 or 22 or whatever the case may be. But that's not the case. Only the amount of money above, all right, is going to be taxed at 32. So if you're making $250,000 and you make a financial decision that increases your income, it doesn't mean that all of your income is now going to be taxed at 32%. It means that only that portion from 326 to 414 is going to be taxed at the 32%. Or something that might apply to more people, if you're under $80,000 a year from an income standpoint and you're worried about making too much money or making more money because you're worried about going from a 12% to a 22% tax bracket, it's not like all of your money is now going to be taxed at 22%. Only the amount of money, right, from that 80,000 to that 100,000, for example, only that much money is being taxed at 22%. So maybe you're cashing out a 529 account and the gains of that account are going to be added to your income. But what is your effective tax rate. In other words, how much are you going to have to pay in taxes on those gains in addition to the 10% penalty? Or maybe you're doing like I said, maybe you're cashing out a retirement account in a difficult time, which I'm not making any of these suggestions or recommendations. You want to consult with a professional on those decisions, but maybe you're making a decision that increases your income for that year. Or maybe you receive an inheritance or whatever the case may be. It's not like all of your income is now going to be taxed at a different tax rate. It's what we call an effective tax rate. So for you to be able to calculate your effective tax rate, this is a cool tool that you could use for that.